In banks, there are so many title frauds. Despite title deeds verification by the lawyers, no accountability. Valuers give absolutely horrible valuations. Suppose they give a property valuation of 5 years old, which is of say 100 crore. Today, if you go, the market value is not even 30-40 crores. They are realizing no accountability. Only auditors are accountable. Unfortunately.
Banks, while disbursing loans, even there at some levels they have to take credit rating from the credit rating agency. So once it becomes NPA.
No, we have seen the whole Lehman Brothers collapsing. What happened to the credit rating agency? You have the Standards and Poor's, Dun & Bradstreet, all they were under some fear at that point of time. But I don't think only regulations have come for auditors, for promoters, for private companies. Unfortunately, no. But you are right. I think we should not be hitting other people under the belt.
No, it's not a question of hitting other people under the belt, but
no, I think let some defaults happen. Unfortunately, what has happened is anything wrong happening, who are the auditors? They don't ask who's the person who's done the fraud. First question asked is who's the auditor. That's it. I think it's an importance that the amount of credibility or which we have. See what we say, lawyers तो ऐसे ही है या for example credit rating is ऐसे ही होगा. At least from auditors there is an expectation that they should do no wrong. For other people they accept it, they can always do wrong. That's the feeling. So it is putting us on a higher pedestal.
The lawyers we are not touching because of strong lobby. Most of the ministers, law minister, finance minister, lawyers.
Absolutely. We need to issue. I'll just quickly run through. Issue circular to members containing financial position. Credit rating, details of past deposits still not paid, repaid, and other particulars. We have to file this with ROC in 30 days. We have to maintain 15% in bank deposit. Those deposits which are maturing during that same year or the next financial year. We have to take out deposit insurance for all deposits up to 20,000 rupees, and if they have more than 20,000 rupee value, up to 20,000. In case you are taking secured deposits, then details of security has to be mentioned. You need to appoint one or more deposit trustees in case of secure deposit, and then rules of appointment and duties of those trustees. So if you are taking secure deposits, some additional things have come for the trustees and all, and you have to certify that the company has not defaulted in the repayment of deposits. Only then you can accept from members as well as from the public. What are the transition provisions for repayment of the existing deposit? There is no discussion on the repayment of the existing loans under 185. It's silent right now. Maybe they may come out with rules at a later date. But for acceptance of deposit, even from members, if it is not falling within this criteria, the company has to file a statement with the ROC within 3 months of this section becoming effective, of what are the deposits unpaid, including from members, what is the interest payable thereon, and what are the arrangements you have made for the repayment. And you have to make the repayment within 1 year of maturity, whichever is earlier. Only exception is the National Company Law Tribunal can give time for further repayment. So that provision they have given. Of course, there is an issue when the NCLT will be formed. We have got an NCLT, National Company Law, under the old Act also, which is still not functional because of the dispute over the manning of that particular tribunal. Now, for the current National Company Law Tribunal also, the Chennai Bar Association has gone to the court and got a stay from the Supreme Court, and there's some litigation going on. We have to wait and watch. So when all this paraphernalia of NCLT and all those will be made applicable. Deposits will include entirely as per draft rules, share application money outstanding beyond 60 days, and such application is not refunded to 70 days. As I mentioned, see, share application money is exempt, but only to the extent it is not more than 75 days, it will be part of the deposit. Within 75 it will not be deposit. Loan from relative of directors or loan from directors in case of public companies will now no longer be exempt, will still be a deposit. Advances received from supply of goods or provisions outstanding beyond 180 days. So if you got any advance for goods, all these are our typical planning measures which we did to avoid the acceptance of deposit rules. All that are being flushed. If you got acceptance, advance from customers more than 180 days, it will be a deposit. Then you have to comply with all the rules. Advance from buyers of immovable property if agreement is not registered. Now this is going to be a killer for the real estate companies. I think already I got one or two query how to come out of this problem. Generally they give letter of allotment which is not registered, etc. So one has to find a way out, otherwise they will be hit. It will be any amount they receive from their buyers of the property may be treated as a deposit in case it is not registered with the authorities. What is the punishment on failure to pay the deposit or any part of interest thereon? repayment of number one, you have to repay the amount. Fine of not less than 1 crore, which may extend to 10 crore. Now you see the quantums of fine. Officer in default will have imprisonment which may extend to 7 years or fine not less than rupees 25 to 2 crore or with both. And what in case damages of, if you have taken a deposit fraudulently, officer responsible shall be personally liable without any limitation of liability for all the losses or damages incurred. This in my view is a good provision. Like a lot of fly-by-night people used to take deposits from valuable public and not repay. So they are making it stronger for that. I am happy from the investor's perspective. We'll go quickly into one-person company. A new animal has been created by these companies. That two animals, I would say, one-person company and small. Again, this is try to following the fashion. UK has got this one-person company concept where engineers, consultants, chartered accountants, or any other professional who are giving advice, they form a one-person company. So what is a one-person company? Which is only one person as member, minimum one director, and only a private company can be formed under a one-person company, and the perpetual succession is through the nomination in the memorandum of association. Now, what are the important benefits of this? Cash flow statement is not required. Then, one-person company has to be mentioned in below the name of the company. Annual returns can be signed by a director if there is no company secretary. Now, it's a big relief, no? Need not hold an AGM. Inform the registrar companies about every contract entered and recorded in the board of directors meeting within 15 days of the approval by the board of directors. And in case it is only a one member, need not hold an AGM, it can just depend, the member can submit a resolution that will be recorded in the minutes book, signed and dated by the member. And same way for the directors meeting also, it is just a recording of the minutes. So what we are doing right now for private companies, paper meetings, so they are official blessing for the paper meetings for the one-person company, and which is rightly so. They need to file the financial statement within 180 days. Okay, sorry, it's covering. So I will not go on. I'm told the next small company also is covering. I will not speak. He's covering government companies also. We'll go into benefits of private limited versus LLP. Now, of course, Law Regulated Companies Act and the LLP Act, minimum capital requirement is there for private companies, no such requirement for LLP. Profits are taxed at 32.445%, that is taxed at 30.9%. The dividend distribution tax is 16, almost 17%, no dividend distribution tax in LLP. CSR is applicable, 2% of profits has to go for CSR, no such provision for LLP. Registration formalities we are aware, both are with ROC. RBI, of course, let me tell you, LLP, I don't know if somebody can inform me. My impression is RBI has not yet accepted LLP as an entity itself. They are completely silent on the LLP, this thing. So I don't know. Government is allowing LLP even, in infrastructure projects. They're saying FDI is possible in through the LLP mode. But what's going to happen if RBI is silent and FEMA, provisions are silent? How it is going to pan out? I'm not sure. So that's one. But a lot of large companies are forming LLPs, taking benefit of the FDI, etc. Liability is limited to share capital in case of a company. In case of LLP, liability of partners is limited to the extent of their agreed contribution, except in case of intentional fraud or wrongful act or omission or commission by the partner, errant partner will be liable. We need to have two designated partners here in LLP. In case of companies, we are aware cost of formation is relatively high. In case of company, relatively low. In case of LLP, it's all comparative. Board of directors required to give detailed report. No such requirement in LLP. Audit committee is not required in LLP. Loans to directors 185, 186. No issue as far as LLP is concerned. In companies, we have issues now. Rotation of auditors not required in LLP. Substantial level of compliance in case of company, whereas lower level of compliance in LLP. Related party also no issues as far as LLP. We have got issues as far as acceptance of deposit also no, right now no restriction, but I think the RBI Act will apply. RBI Act has got some provisions for these type of thing, but subject to RBI Act, I think there are no other restrictions on acceptance of deposit. Class, it should be class action suit, it should not class action, sorry, this is a typo. That could be filed against company, no such provision in the LLP Act. Of course, if the audit firm is an LLP or any expert firm, there can be class action suits against the auditors, even if it is an LLP. Or even against expert firms, it may be a professional firm not doing audit, but even against them, class action suit is possible.
Sir, NBFC can be LLP?
No. RBI still not giving the blessings, and even the LLP itself, the registrar of LLP and the ministry is still not, given. This was represented by the institute a couple of years back. When both they think, whether they want to keep the LLP only to the smaller entities or they want to allow, foreign direct investment also, because the foreign companies also were interested in this structure. So that time they accepted one suggestion, which was of, which is a policy issue, just a suggestion. So they accepted that possibly they can allow, need not restrict it to smaller entities, they can allow FDI into LLPs. But this NBFC thing they didn't allow. Let me again see their hypocrisy. I can share first-hand information. When this point was raised, the then registrar of LLP, I don't know whether the same gentleman is there, started talking, saying that there's a lot of tax benefit, a lot of this dividend distribution tax is not payable, etc., etc. So I had to tell him, we were in a group, company secretary, chartered accountants, and I said, sir, your job is to promote LLPs. Taxation job is of the Ministry of Finance. If they want to tax, the tax. You don't kindly wear the hat. The registrar of LLP, rather than promoting LLP, is wearing the hat of the tax, tax savings. That's why they don't promote in this. Then I told him. So there were some newspaper reports that some, I don't know who named the groups, some large groups have already transferred a lot of investments to the LLPs. Yeah, I also know. What have you done? Nothing. But if you want to officially form an LLP with the investment mode, they'll say no. You form any other LLP, I am not wanting to suggest that. Nobody is going to ask police, you are going to ask questions. There is a newspaper report which is available. Large groups are transferred investment to the LLPs. I don't know what questions are being raised. There is no policing. And he admitted he is aware of it. No action. So one side you are wearing a hat of a hypocritical hat as if you are trying to be, protecting the nation as far as tax payment is concerned. But when it comes to taking action against some people, where there is newspaper report, no action. That's the hypocrisy which is there. Sorry. Yeah.
Can private company be converted into converted company? Is there any rule like that?
I think possibly let the next speaker. I have not read that, but let the next speaker speak on that. He's going to cover one-person company. I will not only certain things. I think this Himanshu would have taken aggregate value of turnover definition as he pointed out. So we'll have to go on to cash basis. This is the definition of control. I just read because control we have referred at a lot of places in our earlier presentation. Control shall include right to appoint majority of directors, control the management or policy decisions exercised by a person or persons acting individually or in concert. Now this word persons acting in concert has been brought in for the first time in Companies Act. It was there in SEBI. Directly or indirectly, this is also very important, indirectly is covered, including by virtue of the shareholding or management rights or shareholders agreements or voting agreements. So any of this, so you need to focus this from your, assuming you've got clients who have got PE investment, venture capital investment, shareholders agreements, to see whether they are getting into this control, because this will have repercussion in a lot of other places which I mentioned earlier in our presentation. So kindly look at the control definition. This we discussed. CFS is mandatory for private companies also, and it has got a lot of much more mandate, where it has to be placed before the AGM. Now, what used to happen? Let's say practical issues. You look at, just to say sake of name I am giving, say Tata Chorus. Tata Steel is the owner of Tata Chorus, which has got subsidiaries all across the world. Somebody is following US GAAP, somebody is following IFRS. Under the AS21, we are supposed to have similar accounting policy. But today, since it was not part under the Companies Act, an auditor could have qualified. The company could have continued following US GAAP, consolidated maybe apples and oranges, different accounting policy, and the auditor could have got away with it, and the company could have got away with it just by qualification, because they didn't have the sanctity of law other than SEBI, saying that different accounting policies have been followed. Now, under the Companies Act, since consolidation is mandatory, you cannot follow different GAAP. It will have to be same GAAP. Reporting format. We have got our the revised schedule 6, and now this will be revised schedule 2 or 3. So it will have to be the same format. You cannot have different format also. Depreciation, I think Himanshu should have covered. Just for the sake of reiteration, it is going to hit you under the belt, your clients. Continuous process plan, life has been reduced by 10 years. General plan and life has been reduced by 5 years. And In case your client is unlucky, this is what is going to happen. If your client is unlucky, say, take the continuous process plan. The life has gone down from 18 years to 8th year. If you're in the 7th year, and 7 year coming, you're in the 8th year right now, as and when this section becomes mandatory, the balance 11 years of depreciation you have to provide in 1 year in the period. If you're in the 9th year, the balance 9 years you can hit it to your reserve straight away. So that's the way. So it depends on your luck. What is the timing of the, how much is the useful life which is over for continuous process plant or for building. So that is the provision of the Act. This also, I think, just again for the sake of re-emphasis, though Himanshu would have spoken, case of free reserve, any amount representing unrealized gain, notional gains or realization, whether shown as reserve or otherwise, will not be considered as a free reserve. Now, what do you mean by unrealized gains? For example, I have done credit sales, in the sense, they got debtors. Is it unrealized? Assuming foreign exchange, I have translated the debtors, creditors, etc. Is it unrealized? There are issues which needs to be answered, which all these issues are being taken up by the institute with the ministry. We cannot issue shares out of, bonus shares out of realization reserve. One good thing which has come up is you cannot issue bonus shares. I don't know whether this was covered yesterday. I'll just spend time. If you have defaulted in payment of interest or principal on any FD or any debt security, the company cannot issue bonus. In my view, it's a very welcome provision. If you have defaulted in any statutory dues of employees like PF, etc., gratuity, you cannot issue bonus. I think it's a very good, provision. Securities premium utilization, slight variation is there. I will not go into it. Reopening, I think Himanshu would have covered yesterday. Reopening division. Debentures, only one thing I want to highlight again, even at the sake of repetition, is debentures include debenture stock bonds or any other instrument of company evidencing a debt. Now, is your ICD or debenture will be an issue. Now, the problem is, you have to create a debenture redemption reserve, etc. So, any other instrument of a company evidencing a debt, you have got a ICD or assume you have got a hundi, you have issued a bill of exchange. Will it be an evidence? Any other instrument of company evidencing a debt? So we'll need clarification here, or you have to create a.
Sir, in this case, ICD reserve has to be created.
Yeah, absolutely. That's what I said. As of now, it looks unless there's a further clarification. That's the reason of focusing on that point. Auditing standards are now mandatory under the Act. Friends, how many of you are in practice over here? Most of you are in practice? How many of you have got yourself subjected to peer review? Balance those who are not, my suggestion is kindly got yourself subject to peer review, because see, peer review is a friendly review. And let me share our experience. We have gone through 3-4 rounds of our national peer reviews and 3-4 rounds of some international reviews also. And each review enhances your documentation. It's a good, see in India as we say mindset, जब तक वो सिर पे कोई बैठता नहीं अपना काम नहीं होता, even documentation. So it will be a good pressure on us and on the team to improve the documentation level. Till the time this standard, this becomes mandatory under the Act, once NFRA comes into picture, and get yourself subjected to peer review by a good reviewer. Don't just do it for the namesake. So that you add value to your documentation, a friendly review, improve your documentation, so it will be helpful as and when this comes under the Act and NFRA starts looking at it. Look at the appointment of auditors. Just one thing I want to point out here is the audit committee has to consider the completed and pending proceeding against the auditor before ICAI or the NFRA or tribunal of any court. Now, they have not given any time limitation. Disciplinary proceedings 5 years old, 10 years old, nothing. Even if it is 50-year-old disciplinary proceeding against the firm, you have to inform the audit committee. On the reappointed, reappointment of auditors, I'll just give my view in the sense. The Act says there is a 3-year transition provision. The rule says the past period has to be considered for the purpose of rotation. Draft rules. And the government wants that it has to be retrospective, in the sense within 3 years, assuming you are an auditor for 15 years, you need to move on in 3 years. If you are a partnership firm. My individual view on the legal interpretation is that if the firm or the individual has not been appointed under section 139, you cannot be rotated out. First, I have to be appointed under the section, and only that, whatever they may say, the rules and all, unless the section is amended, Unless whatever the intention is, I think somebody can go to the court of law and say it cannot be, applicable. So in my view, somebody challenges it, this could apply after 10 years. But you need a challenge in the court. The intention is to apply it retrospectively. Second, I think in challenge on one more count, on the independent directors, they say it will apply prospectively. Now, how can the state of independence, the state of mind of independence be different for an independent director and auditor? That is another point which can be used in favor. If the government says that the independent director's retrospective period is not to be considered prospectively, why for the auditors there has to be retrospective? Can there be different yardsticks for the state of independence? In my view, no. Only somebody has to challenge it. This I will not. Another, obnoxious provision, again the drafting, I think, issue, just 141(3)(1) A person who cannot be appointed is any person whose subsidiary or associate or any other form of entity is engaged as on the date of appointment in consulting and specialized services. The problem here is, do they want that only pure audit firms to be doing the audit and no other associate? Right now we talk of capacity building, one-stop shop, everything. But this again, the way this section is interpreted will create problems in the sense, you may have a pure audit firm, you may have a separate firm where your partner which is doing tax, or maybe indirect tax or whatever, any consulting service. If this is interpreted very narrowly, this will create a problem. Now one same firm cannot do, even your associate or subsidiary cannot do. And an associate firm cannot do this. Again, at the cost of repetition, one point I want to just read out. See how they have worded this section 143. If and on the fraud point, if an auditor of a company in the course of the performance of his duties as auditor has reason to believe that an offence involving fraud is being or has been committed against the company by officer or employees of the company, he shall report the matter to central government. Reason to believe that an offence in fraud is being committed. How can you, are you sort of astrologers or that you can find out if fraud is being committed? You can know after the fraud has been committed, at the time of happening, and reason to believe. In fact, this matter was discussed with the ministry in one of the meetings. I just, luckily I was there along with the president and all. I said, this piece of paper, if Tata Steel buys, and it's a Nilesh Vikamsey private limited buys, will it, and if the rates are different, and I am auditor of both, can I say there's a fraud in Nilesh Vikamsey private limited? Say Tata Steel is buying tons of paper, and I am buying one bundle, one packet of that paper. So is the cost going to be same? But I am the auditor of both. Tata Steel has bought, say, at less than a paise per paper, and I have bought at 5 paise a paper. Can I say there's a fraud? Assuming I have a reason to believe that fraud is, and I say this is a fraud over here. Who's going to protect me in case it's not a fraud? So that's the type of mindset. There's a huge communication gap between the expectation of the ministry and see the way this, just couple of things I just want to show from the mindset. The report shall be sent to the Secretary, Ministry of Corporate Affairs in a sealed cover, by registered post, with acknowledgement due, or by speed post, followed by an email in confirmation of the same. No other law has seen this type of thing. You say registered at your speed post or whatever, followed by an email in confirmation saying, oh, what is this? That just shows the lack of trust and faith. Possibly, I think we also as auditors, we need to gear up our act. There is the trust factor. There's a huge gap which may need to be, covered up. The report shall be sent on the letterhead of the auditor to be signed by the auditor with the seal and shall indicate the membership number. Then another issue where auditor has sought and received information external. Till now we say we have received all the information external necessary for the purpose of audit. Sought and received. Again, I'm just trying to bring the mindset from which the drafting is coming in. And what is the fraud? What is the material fraud? Frequently happening fraud is the material fraud. In a large company, you have 1,000 crore. If there is 1,000 rupee fraud happening frequently, it's a material fraud. You may need to report that. Now look at the punishment. Again, very, very interesting, dissection. If there is under the section 139, 143, 144, 140, there is a, non-compliance. Minimum 25,000 rupees if you do it unknowingly. Maximum 5 lakh penal this thing. And you have to refund the remuneration you have received and pay damages for the losses suffered due to misleading statement in the audit report. This is Unknowingly. Knowingly also there is no difference. Only the minimum penalty is going up from 25,000 to 1 lakh. There is a complete drafting error. If it is unknowingly, if it is knowingly, willfully, I think all this refund of remuneration, etc. is fine. If it is unknowingly, there is no question of refund of remuneration or damages. I think there is a drafting error there. Amongst the various things we should need to maintain in the audit report, we have to mention the effect of pending litigation on the financial position. Now, AS 29 is being thrown to the wind. Even if there is a remote possibility, we may need to report. Here, our accounting and our auditing and assurance standard board has been escalated with all these matters. How do we start reporting in these matters? Provision for foreseeable losses on long-term contracts into derivative contracts. Again, if there are losses right now, we already account for it as per the issued notification, even in derivative. But foreseeable losses, how can I figure it? If there are going to be losses in the future on those derivatives. Again, I need to be an astrologer there as an auditor. One of the most draconian provisions, this is in section 140. Just a couple of minutes I think, I'm exceeding my time, but I wanted to pay focus. The tribunal, either suo moto or on an application by central government or by any other concern, is satisfied that the auditor of a company has directly or indirectly acted in a fraudulent manner, abetted or colluded in any fraud, by or in relation to the company or its director's office, it may by order direct the company to change its auditor, and more importantly, the auditor shall not be eligible to be appointed as an auditor of any company for a period of 5 years from the date of passing the order. Now, this is, in my view, completely draconian. So today, then we have got large firms, even in small firms, for 4 partners, 5 partners, 10 partners. So today, when you join the partnership, basically everything is good. Tomorrow, say somebody's mind changes, the greed changes, or the situation changes, and one partner gets into this fraudulent act with some particular company. You are an auditor, the firm is the auditor. How can the home firm be punished? Look, let's take the case of Satyam. Let's assume that the auditors have been involved in the fraud. Can the whole firm be, said you cannot be renewed for 5 years? Where is this justice? And on one side, the same ministry is talking of capacity building. So typically it is fashionable. Kamlesh Bhai mentioned to the ministry officials some years back in Geneva, when they met in some meeting, that China is promoting 10 of their very large firms to take on the big 4. And since Kamlesh Bhai had written a forward to that particular book or that particular gentleman, Chinese gentleman, he mentioned that. And we should also do something for the Indian firms. From that is a fashionable statement. You go to ministry, we want to promote, we want to build capacity of the Indian firms, etc., to take on the large firms. And you have such a provision where, how can you build capacity? How will anybody grow?
What is the institute's reaction to
Yeah, we have represented all these things. No question of reaction. The question is, everything is falling on deaf ears. Whether it is institute, whether it is industry, all the representation are falling on deaf ears. Somewhere there is a communication gap. Possibly, I would admit, part of the thing we need to engage with them more. The level of engagement has been there. It's not represented also, but post Satyam, I think it's all, they don't want to listen to anything. Satyam has given such a huge beating, virtually impossible to. Class action suit, only one point I want to point out in class action suit is, it is applicable to